Good morning, everybody, and thank you for attending this amazing summit and having me as your moderator for this portion. My name is Andre Purnell, and I am the CEO of the Truist Corporation. We are a real estate development and management consulting corporation, and we're currently engaged in one of the biggest community development projects in the state of Pennsylvania. By applying our tangible action model under the Affordable Housing, Workforce Development, and Healthy Foods Initiative, in about a 5-year period, we would have revitalized and developed 500 homes, 500 jobs for 500 families. That's 500 homeowners, 500 long-term full-time jobs with access to a healthy foods resource through our corner store project. In turn, this will increase the percentage of home ownership in the city and decrease the unemployment rate in the city. And also it will open the mental capacity and the intellectual bandwidth of our community to absolutely understand and fully internalize the meaning of healthy living and then a healthy lifestyle, whether that's physical, financial, spiritual, so on and so on. This is the TRIAX Community Development Infrastructure Sustainment Model. Now, over the past several years, we have been supported and worked closely with Sunset, which is now Truist Bank, in our community development projects over the past few years. So I am here to tell you personally and professionally that Truist Bank is certainly committed to community development projects, and they definitely support small businesses, minority businesses to reaching our goals. So without further ado, I'd like to introduce to you our first presenter, Mr. Anthony Weekly, who is a subject matter expert with Truist on mortgages. Anthony, the floor is yours.
Good morning, and thank you, Andre, for that introduction. First of all, I want to bid you good morning from Truist Financial Corporation. We are building communities, and we're better together. And the first thing I want to talk about this morning is I want to congratulate Al Pina on the job he's done with this 2020 National Virtual Black and Latino Summit. But I also want to congratulate my good friend, Dina Harris, National Faith Homebuyers Counseling. I've known her 30 years. And when I was a green loan officer 30 years ago in Detroit, Michigan, I started working with Dina and her organization, which was pretty new at that time. So I'm going to kind of level set the conversation today. I recently read a book by Ben Crump called Open Season. Raise your hand if you read that book. I see those virtual hands going up and down.
There you go.
Yeah. And this book talked about and outlined the systemic and systematic racism and discrimination and inequities and injustices that have happened over the last 400 years. He talked about it from an education perspective, and I found it odd because this was very heartfelt for me. It was very emotional. I found it odd that our prisons are identifying kids in the 3rd grade, and that's how they're determining how many prisons to build. And this is all in LMI communities. The judicial system, a meager fine can end and incarcerate a LMI type of individual. Environmentally, challenges with brownfields and other type of environmental issues on properties that are embedded in LMI communities. I also recently saw a documentary called The Long Shadow, which really looked at those injustices and inequities for African Americans since the 1600s. And most recently, I read a white paper from Morgan Stanley, right? And I'm just going to read the title of that and what that white paper said in summary. It said, basically, the title is Entrenched Inequality, Racial Disparity, and Access to Home Ownership. They calculated the economic cost of the homeownership gap, right? They calculated, they estimated that the gap was between 4.9 million fewer homeowners having been created, equating to roughly 6 years of household formations. That's pretty significant. And the knockoff effects, 800,000 fewer jobs because of homeownership, and the loss of as much as $400 billion in tax revenue. The gap may also imply drag on consumption, given the Bureau of Labor statistical data showing that household expenditures are, on average, 55% higher for homeowners compared to renters. And so when you look at home ownership, it makes a significant impact on GDP and our economy as a whole. And you may say, why is Anthony presenting this information? Because really what I want to tell you about, what is Truist doing to overcome some of these inequities and inequalities? At Truist, our purpose is to inspire and build better lives and communities. And we signed a community benefits deal prior to the merger of Heritage BB&T and SunTrust and SunTrust to become Truist. And we made a commitment of $60 billion. That's 60 billion to LMI families and geographies. That's $60 billion to rural families and geographies in the form of loans and investments and services for the calendar years 2020, 2021, and 2022. And on this slide, you see some of the important and crucial work that's going on to serve our LMI communities. And so in mortgage, we committed $31.9 billion. That's in purchase transactions only, dedicated to LMI families and geographies, and more specifically to LMI borrowers, LMI census tracts, minority borrowers, and minority census tracts. We're committing to 15 new branches in LMI communities, 10% supplier diversity spend, $17.2 billion in community development lending, $7.8 billion in small business lending, and $3.6 billion in community reinvestment. And obviously, we're looking at our staffing to make sure that's equal to whatever the going market rate is as far as diversity and inclusion. Now, I'm going to talk about, just for a minute, Truist products. I think we're going to take some questions. And I'm going to go through these pretty quickly, simply because you're familiar with a lot of these programs. We offer a wide array of products and programs at Truist. We offer the VA loan, the Veterans loan, FHA, rural housing loan, Home Ready, Home Possible, and our proprietary program that we have. And you got to think about this. Credit availability has been at a 6-year low. Basically, what that means is, because of COVID and all the challenges that have been caused and occurred because of that, LMI families and minorities have been more adversely impacted and disproportionately impacted from a credit perspective, from a health perspective, and from an employment perspective. So this CHIP 100 is our proprietary program, and basically it is a 100% program, 100% financing program, although credit availability is at a 6-year low. And it has no mortgage insurance on it, and you can get a grant with it for $7,500. I also want to give you an example of our Home Ready, Home Possible program. Since about June, we've been subsidizing that program for about 200 to 250 basis points. We just recently had an African-American couple close last week. They got a 2.75% interest rate. That's 2.75% interest rate on a lender-paid MI deal. That's a lender-paid mortgage insurance deal. And then they couple that with our $7,500 grant program. And so really good things going on from a Truist mortgage perspective to make sure that we deliver access to credit for the communities that we serve. And this next slide is really just some quick programs that we have at Truist that helps LMI families and geographies. The first one is the grant, right? The grant I already spoke about. That grant has to be paired with the Home Ready product that's offered by Fannie Mae, and it's targeted for borrowers that have less than 80% of area median income, the clients that need it the most. It must be a first lien Fannie Mae Home Ready loan. It's a single family property, primary property, and the grant is given to the client in the form of a lender credit to make it easy. And the max you can get is 3% of the actual loan amount of your property. And it can be used for down payment, closing costs, and prepaids. That's the Truist grant. And the other program I talk about is a Build Affordable Housing program. We started this program probably 3 years ago. And basically what we do is we work with builders in certain subdivisions that are LMI census tract qualified. They have to be LMI census tract qualified. And basically we can give them a 1.5% lender credit. So on a $100,000 loan, we can give you, $1,500 on that. But it has to be specifically in an LMI census tract. So it's going to help drive new construction because there's a housing shortage right now. And we believe that our builders can help us close that gap. And then there's one other program that's not mentioned on the slides. It's called the Limited English Proficiency Program. And at Truist, we're doing a test and learn right now, or pilot, where we actually have a process where our Hispanic clients can get a bilingual experience. And when I say that, that's from the time of origination with the salesperson, that's with a processor, that's with the closer, and that's with our servicing team. They can have a bilingual experience. And to add to that, we have translated documents, not all the mortgage documents, but quite a few of the mortgage documents. So our client will receive a English version of the mortgage documents and a courtesy copy in Spanish for that mortgage transaction. And basically, when we end our test and learn this year, the goal is to expand that going into Q1, Q2, 2021. So those are just a few of the products and programs we offer at Truist Mortgage. What I'm going to suggest you do is please get in contact with one of your local mortgage loan officers who can help you and give you more details regarding those programs. Andre, are there questions in the queue?
Thank you, Anthony. I do have a question from in the private sections, in the private chat box here. The question is, what growth strategies has the bank identified for mortgages and financial services post-COVID? And how has this pandemic impacted home lending?
So I think I said earlier that when you look at what's transpired with COVID, it affected credit availability, right? It's at a 6-year low. The lower, the worse for that indicator. And actually, last month, it started moving back up. And so what I mean by credit availability is a lot of companies started to increase their credit scores, right? Decrease their LTV, which made credit access a little bit harder. I'm not saying that Truist didn't do that, but for the most part, we stuck with our 620 minimum credit score for transactions, and we continue to do our proprietary program, the CHIP 100. And so we all know that because of COVID, that LMI communities and families were adversely impacted based on income and based on health. So it's been a challenge, but I think with what we've done here at Truist, we had to do $10 billion for the community benefits plan over the next 3 years, and we will hit that $10 billion this year in purchase transactions only from a Truist perspective.
Okay. I do have, and I think you touched on this, but it's in the private section as well. It says, what is your advice as a starting point, such as the best mortgage programs that will help a new buyer achieve the American dream of having a home, but won't be in debt trying to maintain it, but able to turn the property into income using the starter home as an investment to build wealth in the area?
Well, that's a bunch of questions in there. It's purchasing a new home, then being an investor. So I'm gonna take the purchasing a new home. Everybody deserves to own a home, but everybody's not ready for a home. Right. Because really it is about access to credit, but it's also about sustainability. So to me, the first step is you need to go see a HUD certified nonprofit who can take you through the steps of, what's the responsibility of owning a home? What's the budgeting requirements? What kind of credit do you need? So that's the first step, because I truly believe that the lenders out here today in the financial services industry, when you look at the amount of grant funds, down payment assistance funds, and the programs, they're out there, right? And so it's really being educated and aware of what your options are. And that starts with a nonprofit, right? A HUD certified nonprofit who can guide you through that process. They will refer you to lenders. They're required by RESPA to refer you to at least 3 lenders. And hopefully one of those lenders is Truist, because we have the products and programs that you need, want, deserve to close on your home. And you can't beat today's rates. I think you can get a 30-year fix right now at 2.5 to 2.6% on a 30-year fixed mortgage right now.
Thank you. Are there any other questions out there? Okay. Well, if there's not any other questions, I'd like to move on to our next presenter. I think he dropped off here. Lauren, are you there?
I am. Can you hear me?
Yes, I can. Thank you. Lauren, the floor is yours.
All right. Thank you, Andre and Anthony. It's a pleasure to be here this morning and share information on Truist CDF program. The CDF program is an initiative of the bank to further our mission to inspire and build better lives and communities through the provision of flexible credit to high-impact community programs. Truist proudly supports this initiative by partnering with community development institutions, CDFI-like community partners, and high-impact community organizations whose missions align with our commitment to economic mobility and closing critical gaps in meeting the needs of communities, including small businesses and home ownership. Affordable housing has been a key to many of Truist's early capital commitments, and it's represented more than 2/3 of our funds deployed to date, followed by support for for small businesses. As previously shared, partnerships are key to the CDF program's commitment to deliver capital through a variety of lending and investment facilities. The CDFI program not only collaborates with many important community partners, but also with our internal CRA community development managers. Together, these partners help Truist better understand the needs of the community, along with providing the expertise, program strategy, delivery systems, and leadership to deploy funds focused on meeting each community-specific needs. As you can imagine, the CDF program has a limited allocation of funds for deployment, which requires our team to follow a selection process in order to ensure that our impact is measurable and provides us with the ultimate sustainability of the program. Now, the CDF program has 3 targeted areas: affordable housing, small business development, and community revitalization, which includes economic development and consumer lending. To meet these target areas, the CDF program focuses on expansion of lending programs which drive capital to communities, entrepreneurs, and with emphasis on minority and women and veteran-owned businesses. We also provide a standalone fund for affordable housing and community revitalization. So how does the CDF deliver its funding? Well, we do so through debt financing and also equity investments. And we do this in many cases when it comes to affordable housing or small business development. There are often gaps in funding sources or access to capital. The CDF program allows Truist to provide CDFIs and nonprofits with additional funding necessary to fill the gaps in order to make these initiatives or funds viable. In partnering with CDFIs, as you'll hear from John Knott, it also helps provide capital through organizations that can serve clients with non-traditional and more flexible underwriting, much like a brand new small business or the community development institution focused on nonprofit and has lower amounts of equity to invest into a deal. You'll also hear that the CDF program has a goal to keep funding flexible in order to support CDFIs and nonprofits in their effort to provide affordable access to capital, as well as pass on those savings to the projects, businesses, and individuals who ultimately benefit. So I'm going to take just a moment and I'm going to go through each of our funding types. First type is our debt financing. It's designed to provide CDFI capitalization and can be used for expanding CDFI lending resources, providing affordable housing, whether that be rental or ownership, also support of small businesses and micro and consumer lending. We're able to provide patient capital, which allows Truist to align our terms with the underlying community facilities provided by the CDFI or the nonprofit. Now, every deal is unique, but as an example, we have the flexibility to provide longer terms for facilities capital stack, which would be used to support affordable housing. We also provide flexible structuring, which includes reduced interest rates to support maximum capital being deployed into the programs so that it can benefit low to moderate income individuals and communities. An example of a debt facility would be a $3 million CDF loan, which was made to support the CDFI's ability to provide financing for small businesses and some more support for emerging businesses challenged with a lack of access to equity. In this example, the CDF provides a low fixed rate non-revolving term loan to support the development of capital to entrepreneurs across a defined footprint, whether that be a state or a regional area or local area. The lower interest rate allows the CDFI to be able to structure their loans to their borrowers in a manner that meets the needs both of the CDFI and ultimately their client. And of course, the ultimate result of all this will be the retention and or creation of jobs supporting LMI individuals and offering a livable wage through the maintaining or growing of a businesses or community organizations in which they're ultimately being lent to. And finally, our equity investments. They are designed to provide funds which stimulate investment in low-income census tracts, and they may include the acquiring, creation, or preserving of affordable housing, neighborhood revitalization, or provide community development lending. Truist's equity investments must meet public welfare investment requirements, which includes a fund's strategy and deployment, ensuring that the majority of their funds and ultimately Truist's capital will provide benefit to qualified low to moderate income individuals and or census tracts. The funds are closed-ended, meaning that they must have a specific period of time to deploy capital and a defined exit strategy for the investment's dissolution. Now, we're seeing a lot of these type of funds coming about throughout and being created across the country, especially as a way to raise capital and address the affordable housing crisis and needs throughout our communities. In many cases, the goal is to combine private capital from the banks along with public sources such as city funds and other philanthropic partners such as foundations. It's through these partnerships that we'll be able to leverage each other's expertise and strive for the impacts that we're all collectively wanting to see. Now, an example of an investment that we have made into a fund is a $25 million fund with a goal to provide 1,500 units of affordable housing. They're going to do this through loans that they're making to community development organizations so that they can preserve and develop homes and neighborhoods that they support and serve. In this case, Truist could come in with an equity investment of up to $4 million, with $2 million being available at the initial close, and an additional $2 million challenge close once the fund meets an established objective. For this example, the investor mix was made up of individual, foundation, and corporate investors. Ultimately, the capital will be lent to nonprofits that are acquiring or building new homes in neighborhoods to preserve and add extended access to quality affordable housing to residents living in those communities. So I'd like to stop there and see what questions we may have.
Andre, I believe you're on mute.
Yes, I thought I'd lost connection.
Sorry about that. I do have a question here from Marion MJ Marin. So she says, it's great that BMT are now merged because you are known for helping for your deep commitment to the Black and Brown community. So do you have an individual program for credit building to purchase homes, and will your commitment be long term? That's probably a question for Anthony.
Yeah, I would say, Andre, my response to that from Miriam, I did respond to her in the chat box there.
Okay.
Our commitment is long term, right? And we work with select nonprofits across our footprint to deliver those services, like Dina Harris, like a Marcia Griffin. So we work with other key nonprofit partners to help support us in making sure the credit is where it needs to be in order for the homeowner to qualify for a home.
Okay. I do have several questions for you, Lauren. Here's a question from Edward Gadsden. It says, what is the application process for nonprofit real estate developers seeking financing for scattered site single family rental housing? Low rate, max amortization, and 80% LTV requested.
Okay. So question, and I can answer this for anyone that is wanting to make a request for the CDF fund. As I said, our partnerships are key and important. So the first thing that we would do is we want to make sure this is also a local commitment. So we would ask that you start with your local community development manager, and they would be able to work with you to not only determine what are the objectives of the funds you're looking for, but also be able to align them up with the CDF program. And from that, we could have ongoing conversations. So the first step would be to get with your local community development manager.
Okay. I do have another question here from a Kathy Christian located in Baltimore City. She says she's a brand new CDC. She just received $200,000 in startup funding from the city and $50,000 from a private investor. What is the process and how could she partner with Truist? Partner to develop single family housing for home ownership.
Again, great question. And first, as I would say before, is that let's open the conversation. Being a new CDFI or a new CDC, that also presents opportunities that we can learn more about the objectives that you're trying to accomplish. And when we work with our local community development managers, they can in turn get in line with myself and others within the bank to make sure that we are understanding what the needs are in your community, and then also how we can partner with you to address and meet those needs. And of course, we can not only show the Community Development Fund as a potential option, but we also, one of the things that Truist does focus in on is that we try to deliver the entire bank. So if it may not be necessarily the right opportunity with the CDF, we certainly want to make sure that we have other opportunities within the bank that we can explore.
Outstanding. I have a question. My question to you, Lauren, is looking at your slide and talking about community building and partnerships. When building community partnerships, lending money and creating partnerships, what is the plan to be sure that people of color are represented, benefiting, and consistently able to access and participate?
That's a great question. And of course, with many and all of our partners that we speak with and looking at what are the objectives of the program, we certainly uncover that there is a need in communities of color, and also help so that there are not only support for the individuals in working with other of our partners, whether they're CDFIs or CDCs, so that we can bring wraparound services along with the Community Development Fund. So I would say our biggest way of heading out into the community is to understand the needs, work with the partners in the local community, and make sure that our program does align to meeting the needs of all individuals, including minority, women-owned businesses, and veterans.
Outstanding. Thank you for that. I do have a question from Marion MJ Marin again. Her question is for you, Lauren. Investors who want to provide affordable housing for veterans, will they qualify at this point in time?
So investors, would they qualify? I guess I have a follow-up question for Marianne would be, are you looking at putting together a capital stack and the type of investors that may partner with Truist CDC or CDF? That's something we could all look at together with the overarching program, whether that be with the CDFI or the nonprofit that is putting together the fund. But of course, if you're looking for investors, then obviously the question would be, again, are we making sure that we understand the needs that you have, what the objectives of your fund or lending opportunities are?
Outstanding. Thank you, Lauren. Are there any other questions from the audience? All right. I do have one here. Is there a link for Truist CDF program, a link that highlights projects or organizations that have been funded?
There's not a link at this time. This is as you may have seen in one of the earlier slides, this is a really new program. We're within our first year of full deployment. So we are still building out the program, but we're happy to share some of the information of how we're being able to distribute out within our geography. So if you would get with your community development manager, they can certainly get in contact with me and I can share information to you.
This is a good question here, an interesting question, rather. Why are banks adopting and fragmented approaches instead of developing a national strategy?
That's a really good question. And I think, I can answer it from the Truist standpoint is because we do, from our commitment to our geographic region, we want to make sure that we are being supportive of the needs. And we want to be innovative and flexible. But sometimes that means that we needed to look at our strategies both from a community CRA standpoint, community needs, and then what are the available allocations of funding that we have necessary or available. So we looked at all of those different components to come up with the strategy and the move forward that we have as Truist. Other banks may have similar approaches, but they may have a few different individual strategies that they are implementing as well.
Are there any other questions from the audience? Okay, so we're going to move along here to our next presenter. Our next presenter is Mr. John Knox. John, the floor is yours.
Yeah, thank you very much, Andre. I'd like to start by thanking you all for this opportunity to be with you today. It is an honor and a privilege, and I very much appreciate it. You've heard from Lauren and Anthony about how Truist approaches our purpose of inspiring and building better lives and communities through the good work that we do within our business across the company day in, day out. So through those efforts, we're directly helping build healthier communities. What we like to do with our philanthropic effort is amplify the work that we do across the company. We often think that has an emphasis. That's how we help inspire others to help further the purpose of building better communities. So we've got lots of great work that we do through the Truist Foundation and our donor advised fund, and all of that kind of comes together in a way that helps, as I said, amplify the impact as we pursue our purpose. As we moved into 2020, we very quickly, along with the rest of the country and the world, realized that the year was not going to play out in the manner that we had anticipated. So with the emergence of the coronavirus and the ensuing economic impact, it became very clear early in the year that we were going to experience an economic downturn that was sharp and had a dramatic impact on our communities. Particularly, that impact would be felt by small businesses and minorities and people of color and women. So we stepped back and started discussions very early about how we could take our philanthropic giving to the next level, stepping in and meeting what I would describe as our obligation to do more to help our communities move through this crisis. That very very quickly shifted into the environment that we experienced, where the nation was coming to terms with longstanding issues of racial inequity and the greater acknowledgement that we had to do more to address that. And the good thing about the work we'd already started was that it very quickly became clear that the programs we were considering supporting from a philanthropic standpoint would in fact be directly impactful for people of color, and that we were already on a good path with what we were considering. We knew that we needed to do something, as I said, that would be innovative, would have great impact, and would go beyond what we do day in, day out. And so our executive leadership team was very clear that this was the time for Truist to lead from the front. They asked me and my team to explore various options for donating a substantial amount of money to a nonprofit that would in fact be creative, could support our communities, and be done in a way that was sustainable. We knew that if we took $40 million and contributed that to one of many high quality nonprofit organizations that focus on helping small business and people of color, that we drive great impact. It's a lot of money, and we had ample opportunity to give that funding to one or more organizations that we respect and work with day in, day out. But what we wanted to do was identify a program that could be constructed in a manner that would be sustainable. So not just the immediate impact of the $40 million, but how could we structure a nonprofit in a manner that would be sustainable and have ongoing impact? That was our biggest challenge. So we reached out to a number of partners, did a fair amount of research, and ultimately structured a program that came to be known as Corner Square Community Capital. So towards the end of September, Truist Financial Corporation announced the $40 million grant. You know, we say here that it is an initial donation to help establish Corner Square Community Capital, and we use the word initial because our hope and belief is that as our partner, the North Carolina Rural Center, approaches this program, leveraging the more than 30 years of experience they have in administering recovery programs in a manner that proves sustainable, that we're going to be able to grow the program. You'll see in a minute. We'll talk about the immediate immediate reach we'll have as we launch. But the desire here is to expand further, and Truist certainly remains open to making additional contributions to this new nonprofit as we demonstrate sustainability. And so the idea here is that Corner Square Community Capital will help significantly increase the investments in communities and entrepreneurs that have seen decades of underinvestment. We are initially focusing on CDFIs that are located primarily in Truist footprint. You might ask why we are partnering with the North Carolina Rural Center, because North Carolina is in their name. The reason is what I alluded to earlier. They have experience administering programs that have proven to be sustainable, driving impact far beyond the initial dollar amount of the donation or the funding. They've also got talented leaders, very experienced in this space, who have experience at other organizations operating more nationally. And our purpose is very much aligned with what the North Carolina Rural Center does, and they have an intention to broaden their impact, expanding beyond their traditional markets with this program. This is a subsidiary of that organization, and Corner Square will initially operate across many states in the Southeast and Mid-Atlantic that align with Truist's traditional retail branching footprint. Over time, we'll expand beyond that. Truist has lots of businesses that operate outside of the Southeast and Mid-Atlantic, whether it's on the corporate and investment banking side, commercial real estate, mortgage, or a number of other businesses, and we'll seek to expand alongside what we do broadly across Truist. Let's talk a little bit about the program mechanics. How is the program structured? Well, first off, as I said, Corner Square is a subsidiary of an existing nonprofit, and it will operate as a separate entity. Truist is not involved other than providing advice and providing funding. So the program's focus is on CDFIs or MDIs that work in the communities that this program seeks to impact in a positive way. We're structuring the program in a manner that is intended to help them meet the needs of more of their clients. That's really important. We're partnering with CDFIs, and we'll talk about the initial set of CDFIs momentarily. But these are CDFIs whose mission is aligned with the focus of our program. They are serving minority-owned small businesses, women-owned small businesses in low to moderate income areas, and so that's first and foremost how we start. We vet those CDFIs, make sure that they're aligned with this purpose, and then we partner with them to help them, as I said, reach more and more of their clients with their existing funding. So we're trying to back them in a way that is complementary to what you heard Lauren describe when he talked through relationships we have at Truist with CDFIs. Let's talk about how this works a little bit. I think I may have skipped a slide. Let me check. I didn't. I didn't. I just failed to make a point on this slide. Essentially, what the program is doing is purchasing participations in loans that our CDFI partners are extending to their existing clients. So this lets the CDFI make a loan for a certain dollar amount, and then immediately receive a portion of that funding back from Corner Square Community Capital that they can then redeploy by extending loans to additional clients. So the CDFIs own the client relationships. They underwrite the loans for their clients. They submit those loans to Corner Square Community Capital, and if it meets the program's criteria focused on people of color and minorities, and the credit profile is such that it fits with our objectives of sustainability, Corner Square will purchase the participation in the loan and send the related funding back to the CDFI. So on this slide, which is the final slide before we take questions, we list the 6 CDFIs who are participating with Corner Square in its initial launch. You see them listed here. I'm sure you're familiar with them, but we have ACE, Lift Fund, Pathway Lending, BBIF, NCI Fund, and WAKIF. Through those strong CDFIs, all well-respected and highly regarded, we actually reach across the states highlighted in the map to the right, across the Southeast and Mid-Atlantic, but over into the Southwest with Texas. And again, as I said, we're positioned to expand to cover more communities over time. And so the way people can tap into this program is, in fact, to work directly with these CDFIs. The CDFIs are the owners of the relationship, and they're your doorway into the program. And we look forward to broadening this list of participating CDFIs over time. The final point I'll make is that Corner Square is live. It is going to be purchasing the first few participations here over the next few weeks. And they have a website, cornersquare.org. So you can learn more about the program by following that link. So with that, Andre, I'll pause and see if the group has any questions.
I do have just a few questions here. One from Merrick Thompson. It says, what separates your program from FHA's?
Okay. I may have to draw on my friends Anthony and Lauren here. So I'll make an initial answer and see if they want to chime in and add some additional context and color. This program is the first that we are aware of where you have a nonprofit organization with an ongoing program to in a reliable way for CDFIs purchase loans that fit certain criteria. So for the participating CDFI, they know that they have a reliable source of participation purchases that they can tap into. So as they look at their capital and funding, they can over time rely on the fact that if they have $100 in funding, and they'll be able to submit applications to Corner Square that will ultimately purchase, say, 25% of the volume that they're originating. So as they plan, they know that they can extend loans of $125 instead of $100. I know that this isn't the first time that participations have been purchased, but it is to the best of our knowledge the first time there's been an ongoing nonprofit program that does that on an ongoing basis. In terms of how this relates to FHA, I am not an expert there, and I apologize, I can't answer that question directly. Hopefully what I did describe provides a little bit of context, but I'd ask Anthony or Lauren if you've got anything to add. I'd appreciate that.
Yeah, so if you're speaking specifically about FHA versus some of the other programs that Truist has, like our CHIP 100 program, I'm speaking specifically about mortgages. The CHIP 100 program does not have mortgage insurance, where on the FHA transaction, the upfront MIP and mortgage insurance could be pretty costly. So it's really, having a loan officer do a needs analysis and a comparative type of profile for FHA versus CHIP versus any program to make sure that we are offering a program that the client's comfortable with from a rate and a payment perspective.
Yeah. So Andre, hopefully with those two responses, we addressed what Merrick had in mind. If not, we're certainly happy to answer follow-ups.
Okay, just a couple of questions. So as it relates to the CDFIs, there are CDFIs like in Pennsylvania, Community First, and in Maryland, Baltimore Community Lending, and they're not on this list particularly. What is Truist's plan, and what is the action plan to for those CDFIs to either get on this particular plan that you have, or is it up to the nonprofit or the business developer, or sorry, the community developer, to kind of link with that CDFI and introduce this program to them and try to bridge that gap so the developer or anyone that's wanting to take advantage of this type of opportunity to meet that goal? So is there a plan for that, or can you elaborate a little bit on that?
Absolutely, that is a wonderful question. As I was describing the approach, I did indicate that these are the initial lists. We absolutely have an expectation to add CDFIs over time. But what we wanted to do was be very careful as we started. We've got to make sure that this nonprofit is resourced and prepared to support the CDFIs who are brought onto the platform. We've got a stand set up. They are staffing as we speak. So we started with CDFIs with which we both North Carolina Rural Center and Truist were familiar, and we had significant knowledge about those. We also had a view on footprint. We wanted to make sure we had initial coverage that was broad enough to span the the Southeast and Mid-Atlantic, in Texas in particular. So we started with a list, more than 6, reached out to those organizations and talked to them about the opportunity in the program, had dialogue. Most of them were interested. Some of them expressed an interest in participating in the future, but they weren't ready. They weren't ready for whatever reasons to participate on the front end. We ended up landing with these 6. We went through a vetting process that was much more specific to the underwriting expectations and how that would work and governance type things. And these 6 and Corner Square Community Capital leadership aligned in time for the initial launch. As I said, there are a number of others we're already talking to, and absolutely would welcome outreach from additional CDFIs as long as their mission is aligned with the purpose of the program. They're certainly eligible for engagement and participation. And it would just take that conversation between the CDFI leadership team and the team at Corner Square to get the process started, and they'd work directly on that process. So whether it's outreach by CDFI leadership to Reem Campton at Corner Square, or whether it is someone working with, as you said in the question, the CDFI and in making the introduction, that's the way to start.
Okay. Thank you for that answer. Just a few more questions here. So when working with or looking at opportunities, sometimes minority businesses are rejected, and going back to the drawing board and doing whatever it takes to meet those requirements, and then being told no consistently. And now that times have changed, the question here is, can you outline reasons as to why minority businesses are usually rejected, and what can be done to improve the situation, especially during these times?
I think that is a broad question, and I think I think Anthony and Lauren and I should lean in different ways. What I would say to initially respond is, my belief is there are a number of underlying reasons. There's no simple answer to that. That's why it is so important for all of us to be thoughtful and overt across so many different forums and mechanisms and levers to provide as much support and funding to minority borrowers. From the standpoint of our program, one of the things we wanted to do was ensure we were doing everything we possibly could to support to small businesses and borrowers, even if they did not qualify for a product at Truist. That's one of the things that's so powerful about CDFIs. So that is one thing we are doing to help address that systematic challenge. But Anthony, what would you add?
Yeah, I'll add to that, and I think you're spot on, John. You know, a startup, small business is probably a challenge to get financing for. They're probably going to have some collateral or put in their own equity, but that's why we are sponsoring and funding CDFIs, right? Think of it as a stair-stepper program. And so, yeah, some startups, get funding, others don't, right? You have to look at their financials, their balance sheets, to really understand, what's going on from a business perspective. But CDFIs are one way that a small startup, small business could get funding. Think of it as a graduated program. They're going to teach you how to be a better small business person. And when you're credit ready for the banks, they'll refer you to the banks once you grow in your business. And so we've strategically have been working with CDFIs for a long time. because we understand that sometimes there are deals that we will not be able to do, but you should be able to find a local CDFI that probably could finance that small business that's a start.
Exactly, John and Anthony. That's really one of the purposes of the community development CDF program, is so that we can support those CDFIs and CDFI-like organizations that have the expertise and the knowledge in the market to go out and provide those sources of lending to minority and early stage entrepreneurs. Our support to those particular CDFIs and organizations are flexible. As I said earlier, that's the reason we want to be able to be flexible, so that they can not only provide the funding to those startup organizations, but they can also provide the wraparound services, as Anthony was mentioning earlier, to help them become stronger as a business and stronger as in being able to graduate up to additional types of lending sources. So, we do try as Truist to really look at what resources we have that we can put into the community to support those community partners, so that it is a full 360 approach, not just a one size fits all.
Okay. Thank you, Lauren, Anthony, and John. We only have about 3 minutes left, so I am going to go to just one more question here from Kathy Christian, the new developed CDC in Baltimore. She says there is the Vacancy Values Program run out of Baltimore City Housing and Community Development. She said you could also meet with the DHCD's law department to discuss acquisition of properties that are not city owned. So I guess that's information just to kind of help everybody out. If for additional resources. Thank you, Kathy, for that. At this time, I do not have any other questions at all. So I will conclude there. Thank you, everyone, again, for participating in this portion. And thank you, John, Anthony, and Lauren, for providing the guidance and resources. And I'm sure we will, and you probably be getting a lot of emails behind this. This is a really great program. And, I certainly appreciate you guys being on this call today. Thank you.
We appreciate you, Andre. Thank you. And
thank you, Andre. Appreciate you all attending this session today.
Thank you.
Good one. Happy holidays.
Happy holidays to you guys too. Thank you, everyone. This concludes our session.